Hello, I'm Janne Muta, Chief Market Analyst for TIOmarkets, and again it's my pleasure to take you through some markets. Some of them are bullish, some of them are bearish. So let's go and see what trading opportunities these markets offer to us today. Watch this video only if you agree with this disclaimer and with the fact that we don't provide any investment advice. I'm sure all of us have been in a situation where we take a trade and only after a few minutes we realize that we made a wrong decision and the market is going to go against us. So for a little premium kind of insurance cost, you can get this privilege really to exit the trade without any loss. The only thing you pay is the spread, right? So you pay the premium and the spread, and you can get out of the trade without any trading loss. So go to tiomarkets.com/contact to get more details. I'm sure you love it. Okay, the first market on our list is gold. Gold priced in USD. So just a little background on what's been going on here. The market was trading inside this quite a sizable wedge, bullish wedge, and then it created a double bottom. And okay, it has broken out of the wedge, but hasn't been quite able to stay above the neckline of the double bottom formation. Basically, if we drew in the neckline, it would be here. So the reason for this failure is really this low here. The market, this is a significant support area. The market bounced from it there, but then since the penetration, it has been trading below it. So a week ago, roughly, the proximity of that resistance was enough to send the price lower, and since then the price has been trading in a range. So if we take the Fibonacci retracement levels and draw them on the chart, we get a technical confluence zone somewhere here. Let me draw a box there. So basically we have one of the factors is this low there creating resistance, and then we have the other factor is 23.6% Fibonacci retracement and this swing high or reactionary high there. So this area is a confluence area, meaning that it's a technically important level or a zone rather that is likely to attract attention from many kinds of traders. So some people are looking at moving averages, some people are looking at reactionary highs, and some people are looking at historical support resistance levels. But okay, so there is some significant military tension rising in the eastern part of the Europe, and more specifically in eastern Ukraine. So those kinds of tensions could create an environment where gold is benefiting from the fact that people want to move into some sort of safety, and gold obviously has been a safe haven historically. The other factor that helps the gold prices is the US treasury yields, because obviously there is no yield in gold. It makes sense that the institutional investors are thinking in terms of yield. They are comparing different asset classes, and because gold doesn't have a yield, but you have another asset class producing more yield, then the price tends to go there. So the money tends to go there. So that if the yields go lower in this competing asset class, then it means that the price of gold has potential to move higher. Obviously, it needs to break out of this sideways formation first. If we get the break to the upside, I think this width of the formation is likely to give us an idea where the market might move next. Obviously, it's not going to do that overnight, but this projection shows pretty much this resistance here and the 50% Fibonacci retracement being important there. So I think that's a significant confluence zone there. If the price drops below this low of 1723.70, then I think there's a good chance that the market just retraces here and creates either an equal or a higher low than these. So that would be kind of usual. You get a breakout from a wedge, then you get a retracement to the wedge, creating a higher low and then moving higher. So this is what I'm seeing in gold at the moment. Let's go and see some other asset classes, some other instruments. And here we have Euro USD in daily time frame. Just to give you the big picture first, we had Euro USD trending higher for quite some time, and then it broke below the trend line and has been moving lower. Just to give you a reason, if you are wondering whether you should spend your time watching our videos, just a little recap of what's been going on in terms of what we have said about the market. Basically, when the market was trading up here, we said that if we get a break below this 1832 support, then it's likely to move to this 38.2 retracement level also. This was missed by 7 pips, so I think it's reasonable to say that it was pretty much a correct observation. The market, this basically means that our analysis here is in tune with the big money, the institutional money trading the markets. Then we said that, when the market rallied for 2 days, we said that if we get a break above 1786, then there's a more sustainable rally in euro. And this is, excuse me, what has taken the market all the way up here. Now we are approaching a level where basically we have several technical confluence or several technical factors coming together, creating a confluence area. Let me draw a box here. So basically we have these reactionary highs, we have 50 period moving average, we have 23.6 Fibonacci retracement, and we have this channel high. So basically bearish trend line up there pointing down. All these factors are coming together in a relatively sort of narrow area or a zone. So this basically means that even though we have seen a nice rally here, and all the rallies come to an end at some stage, I think this is an area where we have to pay attention to the price action and see if some profit taking starts to come in here. If the market is able to create a sustainable rally above this 1997 high here, then I think we have a chance of breaking out of this downtrend line or downtrend channel, and then possibly test this high. Let me see, the high was at exactly, I'm going to give you the exact level. This high is 2113. So 2113 high is possibly coming into play if we get a sustained move above here. So sustained move basically means that you have you can see the market creating higher lows and higher highs in smaller time frames. If the market rolls over from here, rolls over and starts to decline, the next support level is fairly close. It is here. The level that used to resist price moves higher, it's not that far, so maybe we get a move down here and then a move higher. But if this is broken, I think there's a good chance that we move somewhere down here where we have the 20-day moving average at 1848, and obviously then after that the only significant area that we have is down here where this swing low or reactionary low at 1704 and 38.2 Fibonacci retracement coincide. So let's mark that with a box as well. So that's an interesting level. If ever the market moves down there, it might just move lower, create a higher low, and then just keep on going higher. The key is that we don't know the future. So we have to keep on updating the charts. We have to keep on updating our views based on what the price is doing, because the price really tells us what the markets are thinking, what the big traders are thinking. That's the way to know what they are planning, how they are trading. Obviously, you can't know that all the time, but the market does give you clues if you follow it closely. Now, what about oil? We had news yesterday that this market took seriously. The bulls were buying on the back of the news that the US reserves, or the drawdown in the US crude oil reserves, was double the size the analysts had expected. So it basically just rallied the bulls, and also the news that there was some demand upgrades from the analysts. So it looks like we are in a bullish mode in this market, basically because the market was kind of creating higher lows here and then was able to rally strongly, and it was able to rally and close above this high of 62.22. So basically, let's see where the key levels are, what might be interesting here, and why is the price slowing down at the moment. So I think first of all we need to see what's been happening before. So this swing low here, a key low where the market tried to move higher, rallied a bit, but then failed to stay above the level. This level is clearly playing a role there. Then we have 23.6 Fibonacci retracement there, and those factors together are probably slowing the price of oil down. But there's still something else. Let me show you. If I use the equidistant lines here, and let's take those two reactionary lows there and go to the recent high here. So as you can see, there's another factor, the channel high, holding the price down at the moment. So there we have a confluence area. Now, obviously, the market could, if this continues, it could sort of correct lower. We have a couple of options that we should look at as in terms of what levels might hold. We have this high of 62.22, so if the price retraces back to it and then rallies from then we know that this is in a really strong condition, this market. But we could also see a retracement a little bit further. So let's say, for instance, if I can copy this line, yeah, there we go. Here we had a level that restricted price movements higher, so about 60.87, and then we have another fairly close by here. So there's two levels there. So if we get a move down here, it seems like it makes sense that the market will create a higher low. If it doesn't though, if we get a move below this channel low and the 50% Fibonacci level here, then it's likely to test at least this area here. So I think that's an important area also, because 61.8% Fibonacci level and this swing low, they come together there, they coincide there. So then obviously the probabilities of market violating this low here increase, and then we might get a move all the way down to sort of 54 or so, to these levels that used to be resistance. But staying with the bullish scenario at the moment, if the market keeps on pushing higher, then the next significant resistance is up there. The high is 66.42, and I think that's a significant resistance. So this is what I'm seeing in oil market at the moment, and obviously we say follow the developments in eastern Ukraine too. But if we get lower yields in US treasuries, that means we might have more weakness in the USD, and that should support oil prices also. And obviously, the more vaccinations we get and more good news in that front, then that's supportive of oil price and the global oil demand. So let's go to the next market. And this is USDCAD in daily time frame. As you can see, it's a clearly bearish market at the moment. We had a rally and it moved into this. The market moved into this descending trend line, wasn't able to challenge it. It wasn't able to challenge the 50-day moving average either. There was some rallies to it, but each and every time those rallies failed. And now we have the market breaking this support of the support is one spot 25.02. So 2502 support broken clearly at the moment, and if this continues, if we get lower highs, lower lows in smaller time frames, that gives us further confirmation that the market is bearish and staying bearish. But you can just look at the big picture here and you can clearly see that the market is moving lower. And when you have oil price moving higher, the Canadian currency is obviously the one to benefit from it. And when you have the yields moving lower in treasuries, US treasuries, then that's obviously a bearish case for the USD. So this market looks like it's heading down towards this low of this candle, which is 123.65 or so. And should there be a rally, which at the moment doesn't look very probable option or alternative, and then the level to look at would be up here. Then we have an area there, really. We have 38.2 Fibonacci retracement, we have 50 period moving average, and we have that high of this candle, the spiky candle there, it's 26.28. Okay, then let's take a look at Nasdaq again in the daily time frame, and the market has rallied nicely. Obviously, you have the stocks that are kind of finance intensive. They are growth stocks, many of them, so they benefit from lowering yields. But now we had a rally to this recent all-time high, but then the market wasn't able to find enough demand above the level, and there was a bearish candle closing below the high. So that increases possibilities of this market correcting further. Obviously, I think today is going to give us a clue whether we will be able to move above this candle high or just create a lower high and keep on dropping. Then the question is how far the market might come. And yet again, it is the confluence areas that draw my attention here. So basically these moving averages, 20 and 50 period moving averages, are pretty close to these highs here that used to resist the price moves higher. So let's have a line there. So that's this swing high there, and then another one that was created here. And they come close to where the moving averages are at the moment. So and the 23.6 Fibonacci retracement isn't that far either from those levels. So I'd say this is a highly significant level and could bounce the prices higher if we get a move down here. Further, we could say that if we take the Fibonacci retracement levels and draw them from this low to the latest high, we can see, and just to make this a little bit more clear, I'm going to take these off. The longer term Fibonacci's are now off from the chart to make it more readable. And now we have the 50% Fibonacci retracement here, the ever so 50, the important 50%, and the 38.2% bang on with these level where the moving averages are. So highly significant area. If we get a move down here, I would follow the price action closely here to look for long opportunities. And then if the price just keeps on going higher, if it just moves up, if the yields come lower, if there isn't a full-blown war in Ukraine, then I think we just have to keep on going with the market and buy the dips as it goes along. But at the moment, with all the infrastructure spending promised by the Biden administration, it seems that there is a good long case for the US stocks in long term, but we might see pullbacks every now and then. And here's a key area if we are looking for potential higher lows in this market. If you like the videos that we produce, we really would love to see your comments in the comments section. So take a moment now, tell us what you think. If you have some markets that you are interested in, I'd love to hear from you. Let us know, and we make sure that we help you with any markets that you're interested in, and you might have some trading questions. Leave us a note, comment or question, and I'm more than happy to help you out. And maybe you can do me a favor, go to your friends in social media and share this channel so that they can subscribe to the channel also, and they can get amazing, good, valuable analysis and views that surely will help them in their trading. Thank you for your time, and I hope to see you on the next video. Trade safe, never trade without stops. And I hope that you really do me a little favor. Share this video with your friends so that they can get to see the material too. Lovely. Thank you. Take care and bye.